We're going to explore the reasons behind the current scene and what it means for the pilot car industry. The news are full of panic messages telling us this is the end of the American economy and China is going to eat us for lunch. But all I can say to that is, frankly, my dear, I don't give a damn. In this video, we're going to look at facts. What is going on right now? What is the outlook? Any changes in rates? And at the end, how will the future play out? The current rates that are being offered on the pilot car load boards are still pretty much the same as they were at the end of last year. The average gas price in the summer of 2015 before Trump's election was $2.75. The average gas price in 2019 before the pandemic was $2.58. As you can see, they were stable until that point. The average price in July 2024, in the middle of the Biden administration, was $3.65. This was a dramatic rise in the prices, and we all know why. The average current price of gas in the US, excluding the West Coast, Alaska, and Hawaii, is $2.90. I calculated this figure independently after being unable to locate an existing chart. To derive it, I took AAA's current US average gasoline price and subtracted the typical price differential between the West Coast, including Alaska and Hawaii, and the national average. Here is the chart of AAA, which shows the price for US gas nationally. Nothing subtracted. This is the raw chart. Note the trend. The price of gas, of US gas, has clearly collapsed. The trend in this chart is very important. Now, I could at the same time put the pilot car rates on that chart, but that would be very time consuming. Maybe I will be able to do this in the future to get a simple comparison. But right now, it's not very real. Here's the average pilot car market rates for a chase car. Chase car rate during 2019 was $1.35. Chase car rate beginning of 2025, $1.80. This is a price jump of 33%. The price of gas during that time rose 30%. This simple price comparison shows us that there is actually no panic for us when it comes to the economy. We essentially have lost no money during the past crises we had. In other words, on average, we get about 3% more for our rate per mile than 5 years ago. Now let's look at the hotel prices. Average hotel prices for pilot car drivers rose from $70 to $100. This is a 43% increase. Inflation adjusted, it would be 19% higher. This means we are getting 19% more for it now than 5 years ago. Here's another one. These are the daily rates for a chase car. In 2019, a chase car got $250 per day. In 2025, it's $400. Now that is a low estimate here. It's more in the area of $450. But in any case, if you take $400, this is a 60% increase in price, and inflation adjusted, this is a 33% increase. Again, we're better off today than 5 years ago. This clearly shows we are getting the right amount of money. In some areas, we are getting more day rates and hotels. Why is that? It's simply a question of supply and demand. This is the only explanation. Because there are not enough pilot car drivers on the road, the prices are not coming down. The prices will stay up as long as that is the case. And frankly, it has been the case for years, really for years. If I had done the above comparison that I did for the chase car, if I would have done that for a high pole, for example, the difference would be even more stark. On average, a high pole car driver is getting about 40% more than what he used to get 5 years ago. And that is why right now is the best time to break into this business. If you're serious about success, don't miss my free webinar. Click on the link below to unlock proven strategies and shortcuts to launch your pilot car driver career. faster than you thought possible. Now, what is the outlook? What is the future going to look like? Here's a list of all the upcoming wind projects, including any existing ones. A whopping 10 projects are on the list, and it doesn't include offshore projects. Take a screenshot of this and watch out for these projects. None of this has started yet. Once it is starting, it will suck up a bunch of pilot cars, and that will result in a rate increase for the rest of the pilot car fleet, as it will cause a decrease in pilot car drivers for general oversized loads. But here is more. What about the general data center projects? Traditional ones, like the ones for Facebook, for Google, for the CIA. And then there are the data centers for AI, artificial intelligence. The traditional data center clusters are in Virginia, Chicago, Silicon Valley. The data centers for AI avoid coastal cities due to coast. They favor Texas, Ohio, Tennessee. You can take a screenshot of this if you want. And I did not even mention any infrastructure projects or oil developments. The Permian Basin will continue to do fracking if the current price of oil or for gas is holding. And the same goes for the Bakken field in North Dakota. So if the price holds at the current range, they will be fine. In short, the future looks good, my friends.